I can feel it coming in the air tonight. Hold on. GPU mining has been incredible. The ROI has been insane over the bear market if you spec mined. It's insane. It's so crazy. Let's do this. What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of Super Mario Brothers. What's up, guys? Today we're going to be talking about Bitcoin blasting towards the biggest monthly gain in 3 freaking years. We're also going to be talking about crypto miners still selling off their Bitcoin even as we get closer to the halving. You know, people are trying to say that this is abnormal. I'm pretty positive that this is pretty normal. We've seen the pullbacks from the miner side. The difference here is that the demand for Bitcoin appears to be much higher thanks to the ETFs. This does appear to be impacting ALTS following Bitcoin as well because they're starting to decouple. At least that's what I think's happening. I'd like to hear what you guys think in the live chat and the comment section below. Bitcoin miner Marathon shares outperform peers ahead of possible strong earnings report as well. They're doing very good on their Bitcoin mining side of things. And the U.S. Department of Energy will start comment period on miner survey proposals. So they are not holding off completely. Obviously, we talked about the suit last week. We talked about how it was getting delayed because they didn't provide enough time for the responses that were legally required. So that has been paused, but this is basically moving forward in the future. We're going to talk about Nexalia. We talked a little bit about these Caspa forks last week, about, my problems when I look at them right off the bat with any sort of pre-mines and any sort of node infrastructure, Cedra being an example of that one in particular, Nexalia being a little bit different, but related. Obviously, a bunch of issues with Nexalia this previous week, so it's important to talk about that. Also, there's an interesting article on Bitcoin and Caspa as it pertains to the rule of power. I'm going to show you guys the article, give you a little bit of an idea, but it is very technical, so I'm going to have it linked down below. I think it's a good read if you're interested in basically how this formula basically, impacts the price of both Bitcoin and Caspa and how it's a little bit different between the two. I think it's very good to go ahead and take a look at that and understand it, because we are going to get to the point to where for Caspa, it's push comes to shove. Sure, probably 10 years from now, but that 10 years kind of is exponential in the way that Caspa handles its emission rate, right? So I think you need to pay attention to that. ZLUDA as well is going to be something we talk about today. We're seeing CUDA come to AMD GPUs. This could be massive in the future, especially on the GPU mining side of things, if it begins to get implemented into miners, right? So mining support for CUDA on AMD GPUs. Hey, that could be a thing. And if it does become a thing, it could change basically the entire mining world and turn it upside down, in my humble opinion, because as you guys know, we have a lot of development for NVIDIA GPUs, not as much on the AMD side of things. And that has been kind of a shift that we've seen between the two major manufacturers in the mining space over the past few years, where previously, the AMD GPUs were the go-to when Ethereum was king. But then I think a lot of the mining software developers that were developing for AMD kind of made a ton of money off of ETH and were not releasing as many updates. Team Red Miner obviously being the main one there. Very slow to get updates out. Very kind of slow for the mining side of things. And hopefully we'll start to see a shift in that. Maybe this could be something that helps influence it. We're also going to be talking about optical fiber and a computer that's built off of that. This is interesting primarily due to the fact that, as we've seen in the past for Caspa, the end game for Caspa mining is supposed to be basically optical or lasers, right? And so paying attention to, the developments within this particular industry can relate to you being better prepared for the future movement of Caspa. This could be obviously very beneficial from a power side of things, power perspective, and for very important for Caspa to actually maintain its upward trajectory as emissions start to run out rapidly. And that's because you'll need to have low power costs, but also still be able to secure the network in a decentralized manner that makes it, tenable for people that are running the equipment to stay on the network and maintain the security and integrity of Caspa in the future. We're also going to talk about my consensus meetup. We are running out of slots, and I don't know if I'm going to have to get a different spot or what. I'm going to have you guys go sign up if you haven't already. And then if we hit the cap, I'm going to basically try to see if I need to raise some funds to basically get, a larger location, or just try to find another free larger location. We'll kind of go from there, but that's going to be on June 1st on Saturday, and that will be the day after Consensus ends. I will be at Consensus. You can hit me up if you're interested there. And then obviously the meetup, which is supposed to be right now tentatively at Batchcraft Beer and Kolaches. And so if you're interested in that, going to be in town for Consensus, I'd love to meet you guys, have a chat, talk about crypto, mining, all of that. So let's go ahead and get into it after a word from today's sponsor. And once again, thanks everybody for the support and for being here today. Let's go ahead and run this. Today's sponsor is Build a Mine Bootcamp. I met Scott at the Crypto Mining Conference in Round Rock, Texas, where he assisted in helping put together that conference and visited one of his ASIC repair courses as well. I say all this to let you guys know that I am confident in my experience with Scott that he is the man to put this type of thing together successfully. In the Build a Mine Bootcamp, Scott will teach you how to avoid costly mistakes in building out your first megawatt of Bitcoin miners. You'll get a detailed roadmap and extensive planning checklists. You'll learn how to find the ideal site and get the best electricity rates. By the end of the bootcamp, Scott says you'll leave with spreadsheets, a working budget, and a design plan that you can take to your investors, contractors, team members, or whoever else you are working with to build your mine. Scott's goal is to help you do all this and get your mine built in less than 90 days. So take 30 seconds, go to www.build-a-mine.com/sun. I will have the link in the description below as well as the pinned comment. Then once you're there, click the I want to attend button and you will quickly be on your way toward mining 1 Bitcoin per month. And welcome back. Glad everybody's here. Let's talk about Bitcoin blasting towards the biggest monthly gain in 3 years over this past February. The cryptocurrency has more room to run, analysts say as well. So here's the big old rocket taking off. This is an article by CoinDesk. Bitcoin is poised to close February with a 44% gain, its largest monthly advance since December of 2020. You can already see it kind of taking off. Here's kind of my thoughts behind it. It's interesting that we are seeing it kind of take off and we haven't seen that pullback yet that we typically see right into the run up and of the halving, essentially, which is going to happen in April. We got about a month left. And I've kind of wondered, if that's the impact from the ETFs and driving that up, and seeing that the alts haven't quite followed with that kind of massive gain, other than, some outside cryptocurrencies, of course, like maybe Caspa or some of the meme coins. It's interesting that we're also not seeing a tight follow-up with the rest of the cryptocurrency market. And that could be due to the fact that, ETFs are locked into Bitcoins primarily. And if we start to see, other ETFs for things like Ethereum, that could change a few things as well. Bitcoin's demand via US listed spot Bitcoin ETFs is met with constrained supply, dominated by long-term holders unwilling to sell, Galaxy's Alex Thorne said. Bitcoin is on track to finish its strongest month since December of 2020. Even with prices hovering near all-time records, this bull market isn't close to peaking, analysts said. The largest crypto asset by market capitalization has gained a staggering 44% in February, piercing $50,000 and $60,000 for the first time in years and hitting a $64,000 high Wednesday. The rally followed a sell the news pullback below 40,000 following the debut of spot Bitcoin exchange traded funds in the US in late January. Bitcoin has a shot at hitting its highest month-end end price ever. To do so, it needs to top 61,357 by midnight UTC on October 21st, which I believe it actually did. And so that's pretty incredible as it were. February's crypto rally was broad-based, with CoinDesk 20 index advancing more than 40%. Decentralized exchange Uniswap's governance token Uni, decentralized data storage network Filecoin's Phil, and popular meme token Dogecoin were the best performance of the CD20, outperforming Bitcoin's gains. One note I did want to bring up too, as it pertains to Dogecoin and Caspa, is prior to, what we were seeing in the past, or prior to what we're seeing now, I would have expected Dogecoin to actually be ahead of Caspa, showing very, very strong, adoption on the Caspa side of things, which it obviously needs compared to Dogecoin, because they're very, very different coins. One has very quick reduction in emissions, while Dogecoin is a constant inflationary coin, and so that could have an impact over it, but Doge does have the name. So it's interesting to see kind of the effects of that dwindling supply on a brand new coin like Caspa, pushing it way above and past the Doge, at least in my humble opinion from what I've been looking at here. While Bitcoin's price is hovering near its all-time high, some analysts still see future upside. Quote, "We haven't begun to reach the heights this is likely to go," end quote, Alex Thorne, head of firm-wide research at Galaxy, said in a market analyst posted on X Thursday. He argued that the US spot Bitcoin ETFs are a game changer, providing steady and recently accelerating demand for Bitcoin. Meanwhile, some 75% of Bitcoin supply is owned by long-term holders who have been unwilling to sell so far at recent price levels. On-chain transaction volume on the Bitcoin network and retail interest in crypto are still far from levels experienced during prior peaks, Into the Block analyst noted. And that is one thing that is really kind of a game changer at the end of the day that we're seeing from the effect of ETFs, where we aren't seeing that volume of transactions on the Bitcoin network due to the way that ETFs work, and it mainly being paper traded, meaning the funds for the ETF have purchased up all the Bitcoin and then pushing that in separate off chain for each individual investor. And so that's going to change a lot of the way that it affects, of course, the price of Bitcoin, where we see large single transactions coming in more like a store of value going into whatever the ETFs are, and then individuals purchasing through the ETFs. So that really kind of changes the dynamic of cryptocurrency in general. And what we'll have to see is if those transactions actually interpret into, the wider market, and we start to see increase of transactions on Bitcoin in conjunction with that. And if that happens, then really sky's the limit here, at least from what I'm looking at, due to the fact that we do have, unwillingness to sell by large companies. People like Michael Saylor aren't going to go ahead and sell off their Bitcoin. Obviously, he held through this bear market, wasn't really worried as much as other people. And I have a feeling that large investors in Bitcoin aren't going to be scared off to sell, at any given time. And I don't even think that they'll play the market as much as they have previously, meaning I don't think that we'll see them selling at the top of the market near as much, which means we might start to see stabilization of Bitcoin. Of course, for me, if I'm looking at it breaking out of the halving cycle, what I'm waiting for is for those transaction fees to meet the block reward. And seeing that we're seeing the price of Bitcoin skyrocket, but we're not seeing transactions on the network skyrocket, that's still a few years out. Meaning I still think we have 2 to 3 cycles before we start to see equilibrium between transaction fees and block reward. And that means that we probably will still have a few more 4-year cycles where we see a huge bump up, usually about 3x of whatever the previous all-time high was, back down to the previous all-time high, meaning, you know, sometime between 2025 and 2026, we see a skyrocket up to about $200,000 for Bitcoin, and then we see it come back and settle down between the $50,000 and $60,000 range. That would be what I expect. However, this is, you know, outside of what the norm typically would be for the market, and we're starting to see more and more adoption. It's really going to come down to, I think, also what the transactions on the network start to show. Crypto analytics from Swissblock predicted that Bitcoin's current uptrend is just the start for what is to come. I tend to agree. Sustained buying pressure and strong bullish signals from both oscillators and moving averages suggest that Bitcoin is poised for continued upward momentum, Swissblock analysts said in a Thursday report. However, they urged caution against rushing into the market just now. Instead of chasing the market at these elevated levels, a more prudent approach may be to wait for short-term pullbacks for buying opportunities. Now, I'm going to say it. A lot of people won't say this to you, but playing short-term games in cryptocurrency is the fastest way to lose your ass. And so I don't agree with this. I would play the long-term game, put in what you are willing to lose, right? And then go from there. Obviously, as a miner, I'm not even going to suggest that you purchase Bitcoin in the first place. I'm going to suggest that you mine it. And then that way you actually have hardware assets that are appreciating in value along with generating revenue off of the blockchain. And this is where I differ from a lot of other crypto channels out. I get the point. You know, there are a lot of people that say, well, if you would have bought instead of mined, you would have been up this much. Yes, but if the price goes down, not necessarily true, and they rarely take into account the appreciation of the value of the equipment that you've been purchasing. Already, if you've been purchasing, like I have, S19s below $500 for the bear market, you're already up on appreciation of value of the hardware alone. Plus, you get to capitalize on the actual revenue coming from those machines. So it's kind of a win-win overall. It's a little bit more secure, at least how I feel about it in your investment strategies. Now, crypto miners, though, are selling their Bitcoin as reward having looms. This is nothing new. And I think that it's interesting to watch what, you know, outside analysts see from Bitcoin miners and say like, oh, this is abnormal, or that this is, not what we would expect from Bitcoin miners. However, if you guys have been around for a few cycles, you're fully prepared for crypto miners to be selling off that pre-halving Bitcoin so that they can increase the amount of hash rate they have on the network. So therefore they have basically a better chance at surviving the halving, which is a reduction in the reward they'll be receiving from their miners. And that is just a typical strategy. That's why people have been kind of talking about this pullback, right? Like, are we going to see a pullback in Bitcoin? The wrench that was thrown into the gears was the ETF approvals, which has really changed, what people are expecting from it in general. And I think that it's kind of funny to see it bounce back and forth. And they're like, well, the ETF is what's affecting it. But also, we were expecting miners to hold. I wasn't really expecting miners to hold, were you? Small miners, sure. I get it. At-home miners that are, paying for their power or whatever. But for the most part, home miners aren't going to have a huge effect on the price of Bitcoin in general either. But the number of Bitcoin held in wallets tied to miners has dropped to the lowest since mid-2021, which is actually fantastic news. This means that miners are able to sell off, still maintain their profitability and revenue, and the market doesn't actually tank because the demand for Bitcoin is going up. Obviously, this is good news across the board. And for miners like myself and like a lot of you guys watching the channel, this is fantastic news as well. It means that you can sell and actually pay your power bill without freaking out and thinking you're going to impact the market negatively, which is really what it's supposed to be from the very get-go. Bitcoin miners provide a service. That service is to generate Bitcoin and sell it to the public for investment purposes. Your job as a Bitcoin miner is not to also be an investor from that perspective. In general, you're supposed to provide a service to where you're churning and burning, and that is really what the strategy is supposed to be. It's healthy for the ecosystem as a whole. Impending reward halving and the dry season in China might explain why miners are running down their coin stashes. The number of Bitcoin held by crypto miners has dropped to the lowest level since July 2021 as they run down their coin stashes ahead of the programmed halving. Data tracked by Glassnode shows the estimated number of Bitcoin held in wallets tied to miners fell by 8,426 Bitcoin, which is equal to 530 million US dollars since the start of the year, to 1,812,482,000 Bitcoin. The decline began in the second half of October when miners held over 1.83 million Bitcoin. Miners created valid blocks, adding transaction records to the public ledger or the blockchain. New coins emitted with each block are given to miners as a reward for the work. We already talked about this. Currently, the miners receive 6.25 Bitcoin per block. The having a quadrennial event due in April will reduce that figure to 3.125 Bitcoin, cutting per block reward revenue by 50%. To improve profitability, miners may be using their stored Bitcoin to buy more efficient equipment so that running costs drop, said the Front Financial, a crypto platform based in Toronto, which is exactly what they're doing. That's what I was saying they're doing. And this isn't outside of the norm. This is actually par for the course. Miners may also be inclined to sell in order to better position ahead of the halving, Front Financial said in a Tuesday newsletter. This may involve purchasing more efficient mining equipment due to new economics that the halving will bring. Also, you got to get in, all of the power, all of the, other infrastructure that you need to stay profitable. And that is something that requires large investments. To expect miners to just hold, well, then they're just investors at that point, and then their mining operation will go under. If you're not churning that revenue to increase your mining capacity, then you're going to fail. And that is one thing I think, especially in the GPU mining community, that gets overlooked a lot, right? Where it's like, well, I'm just going to mine and I'm going to hold this. And if you don't hold, well, you're a bad person because you're negatively impacting the market. No, you're not. If the demand for the cryptocurrency you're mining isn't able to handle the newly minted crypto that you're adding into the market, then that cryptocurrency in particular isn't going to survive anyways. And that is really the end of story as far as that's concerned. You're providing a service that is actually supposed to generate transactions on the network and actually prove that that particular cryptocurrency is viable and has demand for it. The prolonged dry season in the southwest of China, which typically extends from October to March and April, could be another reason for the decline in the miners' Bitcoin balances. China accounts for roughly 20% of the total computing power on the Bitcoin network. Miners in some Chinese regions are known to bring online additional hardware during the wet season when hydropower becomes abundant. Conceivably, miners may sell during the dry season to counteract the inactivity of mining hardware, Front Financial said, and I think that's a very important point. Now, speaking of miners, the large miner that appears to be doing the best right now is Marathon. And Bitcoin miner Marathon shares outperform peers ahead of possible strong earnings report. The miner is expected to report a strong acceleration in quarter-over-quarter revenue growth due to the rally in Bitcoin prices, a Jefferies analyst said. Marathon Digital is likely to see strong fourth quarter sales due to higher Bitcoin prices and transaction fees, a Jefferies analyst said. The analyst will also be looking for the miner's potential plan to shift away from third-party hosted mining to self-mining. And that is obviously one of the things that I always get kind of interested in is there's a huge push in hosting during the bear market. And if you are going to be utilizing hosting in general, I think you want to take into account the halving cycles in general and make sure that your contract is going to last basically beyond the halving cycle and into the euphoria stages of the Bitcoin price. And that is because if you don't, it's going to be a lot more tempting for those hosts to move into basically self-mining for themselves and may not renew your contract or charge exorbitant fees or a much higher cost for hosting than, basically they were in the past during the bear market. So if you're looking at those contracts, it's something to consider from a hosting perspective. If you are sending your units out to be hosted, you really don't want to get stuck in a hosting situation where you run out of the contract. These hosts start to deploy their own miners, run out of power, start to try to charge you more, and then it takes you forever to get your miner back. It takes you forever to get it back online, all of those sorts of things. So keep that in mind. Bitcoin miner Marathon Digital shares outpaced mining peers on Wednesday ahead of an earnings report that Jefferies expects to be strong, mainly due to a rally of Bitcoin prices during the fourth quarter. The shares rose more than 6% in early trading, while other mining stocks are mostly muted, even as Bitcoin blasted past 60,000 for the first time since November 2021. The Fort Lauderdale, Florida-based miner is slated to report fourth quarter earnings after the bell on Wednesday and is likely to see a significant boost from Bitcoin's recent rally and higher transaction fees. We expect the company will report a strong acceleration in quarter-over-quarter revenue growth due to a nearly 50% increase in average Bitcoin price from the third quarter of 2023. Additionally, transaction fees have been markedly higher in the fourth quarter of 2023, making up about 11% of miner rewards from just 2% in the third quarter of 2023, Peterson said. And that's kind of where I'm wondering, 11% is quite significant. I don't think we've seen really levels of miner rewards from transaction fees being that high. Obviously, like I said, for us to really break out of the halving kind of cycle, I think we need to see 50%, right? So we're still quite a ways off from 50%. Could that change, with the popularity of ordinals? If those pop off during this cycle, could that be accelerated and we go into some sort of macro cycle for Bitcoin? I suppose that could be the case. What are you all thinking? I feel like making up that 39% is going to take a few more cycles. But, I've been wrong in the past, and we could see that kind of be impacted more immediately, which would be good news for everyone, I think. The transaction fees, which supplement miners' reward of the Bitcoin blocks, have been a boom for the miners. Last quarter, due to the popularity of ordinals, transaction fees saw some significant spikes, helping lift miners' profitability. Wall Street analysts expect Marathon to report fourth quarter sales of $148 million, about 52% higher than third quarter, according to FactSet data. However, the miner is estimated to post earnings per share of 4 cents in the fourth quarter versus 35 cents in the previous quarter, which is interesting. I don't know if that's supposed to be 3.5%. Okay. Anyways, Peterson will also look for Marathon's plans to move its business towards self-hosted mining and buy up more Bitcoin mining computers. Marathon mostly uses third-party data centers to store its mining rigs, which has resulted in some hiccups for the miners. However, Peterson says Marathon has been shifting from that business model, which should help improve profitability. Most recently, Marathon took over full ownership of 2 mining sites where rival Hut 8 was hosting the company's machines. The miner said that by removing Hut 8 as the third-party operator, it will be able to lower its operating costs and improve operational efficiency. Marathon has risen nearly 20% this year alongside other mining companies, has underperformed Bitcoin's staggering 44% rally heading into April's Bitcoin halving event. One of the things, as far as publicly traded miners are concerned, like I've said in the past, is, if you're investing in it, you're adding basically another kind of point of failure for your investment. I'm not a big fan of basically investing into public companies. There can be some benefits there, but there can also be some big downsides, like if they go bankrupt, which we saw a lot of. And seeing that, what we're seeing from these strategies from these large mining firms is kind of opposite of what you would really want to do from a logical standpoint. I still don't trust them to actually handle the Bitcoin mining operations as, efficiently as I would myself. What do I mean by that? Well, I've been purchasing cryptocurrency, Bitcoin miners, during the bear market at a much lower cost. They're talking about taking full ownership now, and maybe the ship's already left the station as far as Bitcoin's concerned. In fact, I kind of feel like the ship has started leaving the station. There's very few opportunities, I think, to get back into Bitcoin ASIC mining, and we'll only start to see those miners start to go up in price and it's a little too late. There are still other opportunities on the CPU mining side and the GPU mining side, even maybe the FPGA mining side. But from the ASIC perspective, I think we're starting to see that ship leave the station. And that is why, like, I give you guys what my strategies are and what I'm looking at, so you see what I've done in the past, so you know when I've actually made these moves, so you can basically have an educated guess on what maybe you want to do with your own things without, financial advice and blah, blah, blah. U.S. Department of Energy will start comment period on miner survey proposal. We talked about this last week and how it got delayed because they didn't give the 60 days notice that's required by law by basically calling it an emergency, which obviously we've complained about quite a few times. It seems like anytime the government wants to invade your privacy, your rights, or anything like that, they call it an emergency, and then they just basically do whatever the hell they want. But this did get delayed with the suit, so that's good, but they are coming back. Don't think this is going to end there. The comment period comes as a result of an agreement after crypto industry participants sued the DOE. The Energy Information Administration, a division within the Department of Energy, said it would solicit feedback on its crypto miner survey after coming to an agreement with the Texas Blockchain Council and Riot Platforms. According to the agreement, the EIA will publish a notice proposing its planned miner survey, taking comments for 60 days. That's the allotted a time required by law, so that makes sense. The notice will replace the previous survey, which was issued under emergency status. The survey, which asked miners questions about their energy usage, was originally published earlier this month, with EIA giving mining firms just a few weeks to respond or face fines. It was the Texas Blockchain Council and Riot who sued, securing a temporary restraining order last week. A hearing rescheduled for earlier this week was canceled after the parties announced that they had reached an agreement. The EIA will, quote, destroy any information that it already has received, end quote, the agreement said, as well as any other information it receives from the emergency survey. Defendants agree that in considering the comments submitted in the response to the new Federal Register notice, EIA will also consider any comments submitted in response to the February 9th notice as if they had been submitted in response to the new Federal Register notice, the filing said. The agency may still choose to issue the survey after the comment period ends, according to the filing. The Department of Energy will also pay the plaintiff's attorney fees, totaling just under $2,200, which obviously that is a good win. They had to pay the attorneys off. Sometimes it does appear that the law does work in favor of people that are being basically targeted. I'm glad to see that that took place in the manner that it did. So just a note on that, it looks like we don't have to worry about it near as much. So let's talk about Nexalia. I know a lot of you guys want to talk about this. We had seen some reports from Rabid Mining about it being a potential rug pull. Of course, then we saw the devs say that that was, all transparent as far as removing the pre-mine or selling off half of the pre-mine, which happened, and then of course losing some of the blockchain. And this is kind of funny because we've already known that this is a potential if you're forking Caspa. So on I don't know what day this was. This was March 1st. Okay, 2 days ago, Nexalia posted an update saying, "Dear community, after 3 days of intense effort and investigation, come to you with a heavy heart to share some significant news about our blockchain project. As some of you are aware, we recently encountered a severe issue where our database, which records all transactions, was compromised. Despite my best efforts to rebuild the database from our main node, I discovered this morning a critical limitation. Our node employs a purge system, making it impossible to recover past transactions. This purge system that he's referring to has been implemented into Caspa for years now at this point, and actually became a problem with Caspa in general too, because their main explorer wasn't recording these old transactions as the node was updated, and then a bunch of data had to get basically recompiled into the node and then re-added and so on. Very messy process, and I had reported on it on this channel, and that was due to something called pruning. So pruning is built into the Caspa nodes. If you were to basically fork a Caspa fork Caspa into a new project, what you would want to do in general is start up your very first node in archival mode. Now, this is going to take a lot more data on the hard drive. The reason you have pruning implemented, especially on Caspa, is to reduce the hard drive space required for the nodes, which means you can be more decentralized because you can have more people running nodes. However, what you sacrifice is transactional history. And because the Caspa network is 1 block per second, soon 10 blocks per second, it takes up a lot of data on the hard drive. And so what was implemented was the pruning mode so that this didn't actually have to impact the decentralization of the network. If you were to fork it, what you would want to do, like I said, is start it in archival mode on a server that has enough disk space to compensate the entire history of the blockchain. Now, there's two parts here that have happened in general. One is that they claim that they've been compromised, and then two, they weren't able to recover and restart the node because they were running everything in basically the pruning mode without even knowing about it. And so from my perspective, if I look at this, I'm like, well, this is pretty poor due diligence on the developer side, not knowing that Caspa in general had this option in their node, especially considering the amount of negative press Caspa got for this in the first place. It's like you forked a project that you don't even know the fucking history of. What's your problem? And unfortunately, this is going to happen more and more and more because the new hot thing is to fork Caspa and come up with some sort of economic force that basically influences the price of the token to go up, like we talked about with Cedra last week, right? We're going to put in master nodes. Ooh, that way we can have artificially decrease the circulating supply and increase the price. And meanwhile, we're also going to take a pre-mine that, you know, the devs control, and we're going to sell half of it off when it's so profitable that we're going to make a bunch of money off of it. And then what's our incentive to continue developing the project? None. Absolutely fucking none. They have no incentive. Okay, so when I talk about being careful with these projects, these are the reasons why. You have inexperienced devs looking for a cash payout and taking a pre-mine. Don't expect to hold these things and for them to take off. Sure, a couple of them might prove out to be good, but the risk is way higher than the reward in most cases. The best case from a GPU mining perspective is to spec mine these while they're not listed yet and then get the hell out right away, at least in my humble opinion. Another thing, people ask me about like what the most interesting Caspa fork is. And I'm going to say it again here because I noticed that in most polls, people are picking the wrong coins. They're picking Nexelia, they're picking Cedra. The most interesting one in general is going to be Carlson Hash because it's going to be GPU mineable. So if you're wondering like which one I'm paying attention to, it's that one. It's none of the rest of these. So just to clear all of that up. Now, there's a lot more going on with this. The link is down in the description below. Rapid Mining has been reporting on it. However, I don't want to say that anything necessarily was malicious from the dev. What I do know is that it displays a level of inexperience and a lack of due diligence that puts me in a red flag notice for this particular project, okay? That's what I will tell you. I can tell you based off the facts that I'm seeing here that they don't know what they're doing, okay? So that's how I feel about it. Let me know what you guys think about Nexelia in the comment section in the live chat, okay? Now, there's an article on Medium that I have linked below that's really interesting, very technical. I want you guys to go read it just so you understand a lot more about Bitcoin and Caspa in general, and it brings up the power law. And to give you guys an idea, a power law is simply a mathematical function that maps input values on the x on the horizontal axis in figure 1, and then to the output values, which is y on the vertical axis, according to the form, you know, y equals x to the k power. With k, the power is constant, i.e. for k equals 2, that means y equals, you know, x times x. It's basic math. So all three graphs above show the same three functions, but the left graph has linear axes. The middle graph has a linear x-axis and a logarithmic y-axis, and the right has both logarithmic x and y-axis. And note that at y equals x to the 1, blue line in figure 1, is a linear function and thus no power law. but it has added to show what happens with a straight line in logarithmic graphs. So this is basically what it's talking about. The importance of it is basically understanding the influence or the actual difference between the Bitcoin asset and other assets. And then it does go on to explain the difference between Caspa and the way its emissions work, being decreased on a monthly stage with a yearly halving event, essentially going down over the month, and how that interprets on those power functions. Now, for me, what is interesting here, I think overall, is this has a very bullish price prediction for Caspa. I think for you guys that are big, into Caspa, if you have bags from the from mining before it hit exchanges, like myself, and you've been holding for the bull run, this could look very good. I do want to make a couple caveats here, but halfway through 2026, the price prediction here is that it will reach $10 in 2034 and the earliest at 2036, with, I believe they're saying like $1 in 2026 to 2027. The thing to pay attention to here, though, of course, with Caspa is going to be that that's going to come around the time of the next bear market, and reward reductions will be significantly decreased. I think I've voiced my concerns a lot with Caspa on this one, but my biggest concern here is that we end up not having enough rewards for the miners to be profitable, and then we lose security on the network. I think that's why when I talk about this next subject, I'm really hoping that we see basically the end goal for Caspa mining, which is going to be mining with lasers, come around as quickly as possible, because miners are going to need to reduce their cost for essentially Caspa to continue running and increase its adoption rate. The good news is that Caspa's adoption rate's significantly higher than most other alts, and that is very, very positive. But even if the adoption is as high as Bitcoin, even Bitcoin doesn't have the transactional fees to really compensate for the lack of a block reward. And that is kind of where I basically put up a question mark of, can Caspa get there from a transaction fee perspective? Obviously, Caspa meaning silver, that's the goal of it, but goals and what happens in reality are two completely different things. And so I feel like if we end up having security issues during the next bear market, Caspa could suffer pretty significantly. Good news is, I think that the way that the emissions work right now, with obviously the supply being reduced quite a bit, most of the Caspa being mined, I would assume in the short term, like I've said before, this bull run, that we'll see essentially Caspa go basically parabolic and have a lot of demand behind it because we already see it, in that top 10 space as far as adoption rate goes. Here's what's interesting, though, too. We are getting closer to the possibility of having basically laser computers. A single optical fiber, scientists build a siliconless computer that uses light waves and surpasses existing systems for classification. Could this be the ultimate AI CPU? Or, could this be the ultimate ASIC? I mean, come on. It could be. It's been used to diagnose COVID-19 infections from voice samples. In an era where the ecological footprint of large-scale AI systems is increasingly being scrutinized, a team of international scientists have developed a potentially game-changing new solution. The team, led by Professor Mario Chemnitz, I think, and Dr. Bennett Fisher from Lebanese, am I saying that right? Yeah, Institute of Photonic Technology in Jena, has built a computer that uses light waves instead of silicon, and it's all done through a single optical fiber. The researchers have leveraged the unique interactions of light waves within optical fibers to create an advanced artificial learning system. This clever method eliminates the need for extensive electronic infrastructure, which is a marked departure from traditional systems that rely on computer chips containing thousands of electronic components. Quote, we utilize a single optical fiber to mimic the computational power of numerous neural networks, explains Professor Chemnitz, I'm going to say. By leveraging the unique physical properties of light, this system will enable the rapid and efficient processing of vast amounts of data in the future. As Tech Explorer explains, data, whether pixel values from images or frequency components of an audio track, are encoded onto the color channels of ultra-short light pulses. These pulses carry the information through the fiber, undergoing various combinations, amplifications, and attenuations. The emergence of new color combinations at the fiber's output enables the prediction of data types or contexts. The team has successfully applied this method in a pilot study to diagnose COVID-19 infections using voice samples supplied by the University of Cambridge. The results achieved a detection rate that surpasses the best digital systems to date. Quote, "We are the first to demonstrate that such a vibrant interplay of light waves in optical fibers can directly classify complex information without any additional intelligent software," Professor Chemnitz said. The paper has been published in Advanced Science. Now, obviously, its use case right now does limit the way that it's functioning. It's not like we can put in code and algorithms and so on, such as it is right now. At least that's what it appears to me from the way it's described. But this is a step towards, I think, the future of computing, and something that, you know, is sort of side related to the Caspa subject. As we know, Caspa is planning on moving away from ASICs and into mining with essentially lasers, if that's even still on the board, right? Because at the end of the day, it will get to the point to where I think investing in new hardware is going to be quite difficult. And there was that whole kerfuffle of essentially the research lab that had the 8 million invested and all of that. We've covered that all on the channel before. Some of that more murky history, I think, of Caspa that, you know, some people have problems with or issues with. And obviously with the loss and having to rebuild some of the early transactions, it was a point of concern for a lot of individuals. I think most of that has been resolved at this point with the full chain integrity intact, and the clear transactions, with all of that being very clear. If you guys have more opinions on that, if you want me to make another video about that, let me know. Kind of done with it. We've done a lot of videos on it in the past. Now, from a GPU mining perspective, something on the horizon that's extremely interesting. Now, anybody that's been GPU mining for a while is aware of the fact that we have some limitations between basically miners coming out that only support CUDA for particular cryptocurrencies and not supporting OpenCL. And the big issue here is, of course, that CUDA is a closed source solution for NVIDIA GPUs only. But we have a new project called zluda, which lets you run unmodified CUDA applications with near native performance on Intel possibly and AMD GPUs. zluda is currently alpha quality, but it has been confirmed to work with a variety of native CUDA applications. Geekbench, 3DF Zephyr, Blender, Reality Capture, Lamps, NAMD, Waifu 2X, OpenFOAM, Arnold, Proof of Concept, and more. So if you want to give it a try, you can download it by visiting the GitHub link down in the description below. What would be interesting is if you could, obviously put an RX 6800 XT into a system, run this, and then run the miner in its CUDA form to see if it actually functions. I have not yet had the chance to actually try with the alpha stages yet, but it is a project that's on, obviously on my list of, this is super cool from a nerdy perspective and could have, pretty large ramifications on the GPU mining scene if it continues its development. And I think just across computing in general, really opening it up. I mean, one of the greatest things that's happened here recently was SteamOS really pushing support for Proton, and Proton being an open source solution to allow DirectX enabled software to run on Linux. And this is, along those lines from a computing perspective, and could be very beneficial for everybody in the GPU space. And I really hope that it proves out to be functioning. If you have tested it already and you've gotten it working on a miner, let me know, what your results have been. There's like some cryptocurrencies like Conflux, for example, that only run on NVIDIA GPUs. I'd be curious if we could get ones that meet the VRAM requirements, like the RX 6800 of over 8 gigabytes of VRAM. If you could get those functioning on, Conflux, is that possible? I don't know yet, but eventually it looks like we will get to the point where that is possible. Now, mining profitability is back up with Pyren being ahead of the game on pretty much everything right now from RTX 40 series, I think all the way until we get to the 7000 series where ALTS takes over. Both of these projects, you know, we do have to worry about FPGAs in the future. We do have to worry about ASICs in the future. And it's really still way up in the air as to whether or not we're going to see a true ASIC resistance solution be extremely profitable. A few times in the past week, and I think even on the 7000 series now, you can see that Ironfish has been profitable, but we don't know what the effect of fish hash is going to have on the network yet. Presumably, it should drive the price of Ironfish up even further than it already has gone up over the past few months because it will increase the cost to mint. Is that going to actually play out? I don't know. There's a lot of stuff from the VC backing to, you know, having to dox yourself for the early test net if you're US based for a privacy coin. Lots of stuff up in the air with Ironfish. I'd like to hear y'all's thoughts on it. Obviously, I'm rooting for it from the perspective of the GPU, you know, or the ASIC resistance and the GPU mining side of things. And from that, you know, other than that, we have a bunch of, you know, essentially ASIC resistance through Capal forks. But with the Capal forks, we have the same problem as you have with the Caspa forks, right? Where you can have essentially pre-mines from the forks and artificial increase of, or an artificial decrease of the supply through 50% node rates. And I'm trying to remember, Firo was an example of one that really damaged its GPU mining profitability. That could happen across the board too. It's going to depend on like what the devs are and, you know, who, you know, which ones actually get behind that. Now, I still need to get my interview with Meowcoin. I've been extremely busy at work this week, but the good news is that it does look like Meowcoin over the past 7 days has had a meteoric rise in price of 44%. Second to that was Ergo. Didn't even need that pesky Twitter account that we were giving them a hard time for, is up 38% over the past week, going above $2. Now, it's still a far cry from its previous all-time high, you know, of like $30 or $32 or whatever it was, but it is going up. Case in point here, though, we're not seeing these altcoins follow Bitcoin as closely as we have seen them in the past. And I have a feeling that's due to the effect of the ETFs, which means we could still see, you know, basically we could see a rotation into alts possibly, but it doesn't feel like that's actually happening. I would have expected the rotation to already take place. The rotations that are taking place seem to be from Ethereum to alts now and a lot less of Bitcoin to alts. The good news there is, of course, Ethereum is going up in price, which is driving up a lot of other alts, but they're mostly on the token side of things. We'll have to see how it plays out in the future. Now, Neoxa is also up 30%, and that is looking good. 0.4 of a penny as far as that's concerned. I'm not a big fan of Neoxa. As you guys know, I'm worried about licensing with Neoxa. I'm also worried about the masternode ploy there. I'm not a big fan. Anytime I see masternodes get implemented into a project, I put up a red flag. That's me personally. But, you know, some of them do play out okay. I thought an interesting one too was Decred, which we talked about in the past, and it's gone up quite a bit. It's another masternode kind of combo with the X11 algorithm. It made the the D9 miner from Antminer extremely profitable for some time while people were trying to build up. Or was that this one? I don't know. Maybe I'm getting mixed up. Anyways. That's pretty much it as far as the top three. The rest are not near as impressive. I think we are back over $30 for Ethereum Classic. It's still a far cry from its all-time high. So Bitcoin's extremely close to its all-time high. Alts or not. That's really the end of the story as far as that's concerned. Let's get into questions and answers. Remember, super chats are never required, always appreciated. First to be answered because they're the easiest to read. Tagging @SonOfATech will highlight the message orange, making it easier for me to read. So please do that if you have a question. I want to thank everybody for being here and making it. Congratulations to making it through the bear market if you're still here. Eeny, meeny, miny, mo says, as always, you're a staple in the crypto community. Are you wearing a Devil Wears Prada shirt? Yes, sir. This is Devil Wears Prada from their most recent tour. It was a great show, by the way. Highly recommend seeing them live if you can. New England Crypto says, I pull off the mustache pretty well. Thank you, good sir. I left it. Now I didn't want to shave the beard. I missed the beard so much, but we had a little bit of an impetigo scare from cryptocurrency, or not cryptocurrency, from jujitsu. It's like the two things that I care about most, cryptocurrency and jujitsu. I just interchange them. And so I wanted to make sure that I was able to keep everything clean and clean it up. You know what I mean? I just wanted to make sure that I didn't get any bad impetigo. I've had it before and it sucks. You got to get the cream and take the antibiotics and all that crap. Mayor says, Ask what Kapow coin are you stacking for the potential altcoin bull run? The one that I talked about, you know, that I have been mining mainly because I utilize it, has been Chlor. But I don't hold a lot of Chlor, right? I utilize Chlor to actually rent rigs. So I kind of churn and burn them onto other like speculative mines. I mean, the real thing that has been keeping, I think, everybody in this community afloat and myself has been speculative mines. And you know, it's a stressful game though. You know, when you're spec mining, you don't even know if that spec mine's going to pay off, and you have to wait, right? And so you're paying, you know, like me, like a $2,000 to $2,500 power bill a month with basically no promise of anything taking off, and you're just kind of hoping that everything plays out okay. Luckily, I've been, you know, blessed enough to basically be able to cover all those costs with some speculative mines, but that's kind of what I do. So that may change, you know, if there is another Ethereum for GPUs, that will maybe change. But as of right now, my strategy is still going to be mining things that aren't listed. So it seems to be the thing that pays out the best. So that's the way I'm going to keep playing. Richard says, Asavatech, thanks for all you do. You're changing lives. Still mining Caspa because of you. Congratulations. I only have one KSO Pro because they sent it over. And then, you know, you guys saw that, but it's running solo, just picking up some coins here and there. And that's about it. Gigaball Trade says, Asavatech, I remember overpaying for a 3060 Ti in 2021 that ROI'd in 60 days on ETH. Do you think we'll see those days again? Not necessarily another ETH King, but. So that was what I was saying. We technically have those days right now. You know, there are cryptocurrencies that are available that even have price listings that, you know, aren't listed on hashrate.no necessarily, that can give you those ROI numbers. The problem is it takes a lot more work. It takes a lot more paying attention to the markets, and it takes a lot of risk. So those numbers are actually there. I've seen like some that are like, you know, some spec mines that have ended up being like a 20 to 50 day ROI on a single coin once they get listed, which is absolute insanity. But you know, there are those opportunities. Now they're peaks and valleys, right? So you get that, and then you have a desert for a while. So you got to make sure that you're paying attention to that stuff. Will we have a GPU cryptocurrency that takes over to the point of being able to sustain every single GPU that used to be on ETH? I don't know. It seems like we're really seeing a lot of different options, and you pick and choose your poison. What that means from my perspective is don't get tied down to a community or to a specific crypto and believe in that wholeheartedly as a GPU miner, because that's when you're going to get rug pulled, right? So be very cautious. I think we'll see essentially multiple profitable coins. You'll pick your poison. Everybody will pick their own. And we'll be good. I got something stuck in my throat. Hold on. I think I posted this the other day, or somebody said the ROI on the 4090 doesn't look like it's worth it. It's like 1,000 days or something. And my thought has always been that when it doesn't look worth it is the only time it's worth it, right? And that is what's worked for me in the past. It's what's going to work again this time. When the S19s don't look worth it, they're probably worth it, right? When the GPUs don't look worth it, which right now, they don't look worth it, right? So the GPUs are worth it right now because they don't look like they're worth it. And by the time, excuse me, By the time you have those, ooh, by the time you have the 60-day ROIs, you essentially are too late, right? By the time everybody was FOMOing in on the last bull run, I was already fully set up with, 200 amps of GPUs mining, right? So you need to make sure that you understand that that's the way it works. Like, there's an amount of risk, and your risk tolerance is going to be determine basically your profitability in the future. You're not building your mining farm for the now you're building your mining farm for the future you, right? That's what you're doing. So talk to your future self, or if you do know how to access your future self, have your future self talk to you and be like, hey, stupid, I want to be doing good over here in the future. Nakuda says, that's not a tech. What do you think about the Newegg trade-in deals? I tried using it once. It didn't really work well for me. I don't even think I got it, the whole transaction through. I mean, it's interesting, right? And it's possible to bump up. Mine something says, that son of a tech, if we peak Euphoria the same time as 50 series release, will you be buying them? I mean, hopefully I'll be making enough money to at least test one per. I mean, that's obviously what I want to do. Am I going to be buying them in bulk? Probably not, right? It'll be like the last bull run where I buy what I can get my hands on and review it. But, at that point, it really is too late. I mean, obviously I'll be making content, and probably the channel will be bigger than fucking ever, and it'll be amazing, right? From that perspective. But the reality is the only ones that are going to be successful in this are the ones that are here right now, right? Like, you guys are going to be able to be successful in this. Everybody that's going to be piling on, that will be making the ad revenue off of and the blah, blah, blah off of, they're going to be too late. And a lot of them aren't going to like to hear it, right? A lot of them are going to probably buy my crypto mining e-course and be like, oh shit, you know what I mean? I should have been doing this 2 years ago. And that is the reality of what this market is, this is this will be my third bull run that I go into properly prepared. Everybody's going to come in. Everybody will be like, dang, I should have been watching 2 years ago, or I quit, and they come back. And the reality of it is just, that's the way it is, man. It is like, I think the biggest lesson in life that I've learned from Bitcoin and cryptocurrency is that literally everything is cyclical. Everything in life is cyclical, right? You're going to have highs and you're going to have lows. And Bitcoin is just a very accelerated example of that. And I think that is the one lesson from Bitcoin that I've learned that I appreciate more than anything else, right? Is life's cyclical nature. And when it's low, when everything's low, you need to just remember that it's going to be high again and find solace in that. And when it's high, you need to prepare for the low, right? And be like, I know that I'm going to have another low. That's just life. And until you really learn that lesson, you're going to keep spinning, chasing the dragon, and you're going to fail. Right. And then you're going to, until you realize that nature of life and that nature of things in general, and to be successful in cryptocurrency, you have to learn that very quickly. Until you learn that, you're going to fail and fail and fail and fail and fail. And as long as you keep chasing when everybody else is chasing and chasing what everybody else is chasing, you're going to fail. That's why, like, most successful people are doing the opposite of what people are doing at the time, right? It is what it is. There is a few differences, right? Like the way I look at it, during the bull run, I am making content. I'm not selling a lot of my equipment. I'm still buying some equipment. That's because I like to do the nerdy side still, right? And you could say buy high and sell low. Yeah, or buy low, sell high, right? But you like that's true, but from the emotional standpoint is what I'm trying to point out, right? Son of a Rabbit Tech says, ask Son of a Tech, you will continue to mine Bitcoin with your ASICs after the halving. Yes. Lotus says, ask Son of a Tech, I am knees here, not from behind when we played Modern Warfare. There you go. Glad I caught your live streams. Good to see you here, man. Alex says, any thoughts about Radiant? I'm still waiting for the ALF equivalent price increase to Radiant. And then, you know, I'm assuming we'll start to see some ASIC and FPGA activity, and then I'll probably be out, right? Like I'm out of ALF. Mainly, I get out of projects when they're done with the GPUs. If you're done with GPUs, I'm kind of done with you, except for Bitcoin. That's the way I feel about it. How high maintenance is it to have a mustache? I don't know. I've only had it for a day or 2 days. Geek says, what coin was your worst decision to mine or buy and why? Probably Pearl to mine it. But that was a multifaceted issue. One, I had a huge hack on a mining pool and we lost probably like 14,000 in that hack. And then they did the classic masternode hybrid rug pull. So Radiant won't go to ALF prices. It will be ALF increases, right? It'll go to like, I mean, if it plays out, you would expect, you know, probably somewhere around 10 to 16 cents, somewhere around there. So I'm talking about from the Radiant perspective, I'm talking about the percent in gain, right? Moyes, don't buy mine. Come on, bro. Super Trooper vibes. There you go. All right, boys, I am going to call it for today. I'm 8 minutes over. Be sure to hit the like, comment, subscribe, and notifications down below. Don't forget to check out my crypto mining e-course at sonofatech.com if you're interested. It supports the channel directly, as well as checking out sonofatech.locals.com, where I post all of my how-tos for any speculative mines that I am participating in. We just had a really nice listing for one of them today, and it's looking like that one's going to get listed on an even larger exchange here in the near future, which will be absolutely incredible. So if you want to get in early on that one, be sure to go ahead and check out the locals at sonofatech.locals.com. Other than that, don't forget to check out today's sponsor, and I love you all. I will see you next Tuesday.